Real Estate and Mortgage Show, your go-to spot for everything home buying, selling, and financing on News Talk 580 CFRA.
Welcome to the show, everybody. Huge win last night for the Jays.
Yeah, I'm just trying to get my voice back.
Frank
that was a late night.
Listen, Frank had a bit of a week this week.
Yeah,
for those that are kind of just tuning into the show and that, Frank on Monday had a big night. He was inducted into the Mortgage Brokers Hall of Fame, which was an amazing event and well attended. And
both you and Sean were here.
Yep.
Were there, so
great
was
night,
awesome.
for sure.
We should have had you there, Greg. Jeez.
Would have loved to have been there
Yeah.
to see your speech and listen to Paul's speech afterwards.
Well, they threw me up there. I don't know why. And of course, I always every time I'm up on stage like that, I always set a record for F-bombs, right? I mean, I remember one time I was the MC at a buddy of mine's wedding, and like halfway through my speech, my mom was there too. My mom actually comes up, she's like, "Paul, stop swearing." I think I set a record for F-bombs.
The way it was going, Paul, I thought it was going to turn into a roast before Frank even got to speak. So,
well, to be honest with you, reader, if Mike, I was talking to Mike, so Frank's business partner, Mike Hapke, was the one who announced him, and Mike was really nervous. And I said, "Well, Mike, if you're nervous, I'll go do it for you."
Yeah.
And he's like, no. But I said, listen, if you're struggling, just, bring in the lefty. Bring in the lefty. I'll come up. I didn't know he was bringing me up there, right? But, if I was announcing Frank, oh, my God, I would have cut him to shreds.
Yeah.
I would have cut him to shreds. Mike was way too nice to Frank. Way too nice.
Well, I told him not to be, too. That's the crazy part. I said, you know what? You're supposed to toast me, but I want you to roast me. It's okay. Let's have fun with this because, you go to these events and sometimes they're a little dry and I wanted some humor. I wanted it to be fun and people laughing. So
that's awesome. Congrats again, Frank.
Thank
that's
you.
Amazing.
If someone were to tell me I'm going to be in a Hall of Fame, I would think a pasta Hall of Fame, maybe.
Pasta eating Hall of Fame,
buying breakfast Hall of Fame.
Jesus.
No, just kidding. What an honor! What an honor it was, and so many of my closest people of my family came. My 5-day-old granddaughter was there.
Which was amazing.
Which was
to
incredible.
See,
But my MBO team, all of them supported, all lenders from across the country. And then we had the after party afterwards, and the Jays won to get to the World Series. So it was a night, not to be forgotten.
Heck of a night for you.
Yeah.
it was.
Amazing. Well, we should introduce, we got Sean Reed in from Advanced Mortgage Investment Corporation, AMIC. Welcome back, Sean.
Thank you. It's been a while. Always happy to come in. And like I said earlier, I have about an hour to spare between going from hockey rink to hockey rink in town. So I thought, why not jump in on the show on a Saturday morning?
That's not what you told me earlier. What you told me earlier.
Here we go.
You heard that the ratings were starting to slip, and so you had to come and get the ratings back. That's what you told me.
Increase the listenership for sure.
That's what he told me. So.
Well, the conference this week.
Yeah.
So, again, congratulations on your induction. What else happened at the conference? What did you guys end up talking about?
Again, shock and relate. We're talking about some of the best mortgage brokers from across the country networking together, sharing ideas together. Some of the speakers we had, Benjamin Tal,
awesome.
CIBC economist, fantastic. just an opportunity for us to get together. And then, the Hall of Fame dinner was awesome. But then at the end of the it for me anyway, and for a number of us from across the country, we had what we call as Hill Day, which means we go to Parliament Hill and we speak to MPs, and we just, we'll lobby on behalf of Canadians on what we think they need. And it was so interesting. This is the 7th time that I've done it, and I was about to quit about the 3rd or 4th time because it's like I feel like we're wasting their time. They're not listening to what we're saying. But I'll tell you, the last 2 years specifically, talk about engaged and talk about understanding what's going on, because housing all of a sudden has now become such
massive.
On the forefront of everything.
Other than tariffs and trade, I think housing is the number 2 conversation going on in Canada right now.
And it's interesting to see the politicians really understand the fact that we do need more housing, and more importantly, we need housing that's affordable and not housing that's not affordable for the average Canadian, specifically young Canadians, to get in. So they had our ear, like at 30-year amortizations across the board. And a couple of the MPs even said, I don't know why we limited it to 50. Why wouldn't we, or 35 or 30? Why wouldn't we go to 35, maybe 40, based on the price of homes, how much it's gone up, and how the cost of living, how expensive it is. So, that's one of the things among other things we talked about. But we want CRA to actually acknowledge the lenders and help, eliminate fraud. And they're the ones who are stopping us from eliminating fraud by, we proposed, even the Bankers Association said, we'll pay for the system. And they're not asking for private information. All they're saying is we're gonna be able to key in, here's the client, here's their SIN number, and here's what they tell us they made on line 15,026. Just verify, yes or no.
True or false.
True or false.
Right.
And that's it. So to eliminate fraud. And they push back. And, that's the kind of things that we figured, let's go to government, let's see if we can get some of those things. We want to eliminate the GST on new builds.
That's actually one of the questions we had this week. That
across the board.
Yeah. Oh, not just first-time home buyers.
First-time home buyers. Why not eliminate across the board?
100%.
We need you to go to local municipalities and start getting some of these developmental fees cut back a little bit because they're preventing builders from getting shovels in the ground, and they're preventing first-time home buyers from being able to play.
Frank, this week I was chatting with Charles, and Charles Clement, who owns Clement Homes, who we do a lot of work for, and he was telling me that his development charges in Rockland are doubling.
Yeah.
He's going from he's building townhomes, and he's going from $25,000 a door to $50,000 a door development charge.
Yeah. How's that make sense?
Yeah. And guess what? But guess what happens with that?
Yeah. Well,
you as a consumer are paying for that. You're paying an extra $25,000 now per door because the development charges have gone up, doubled. But yet, we're making it easier to get shovels in the ground. Really? You're doubling your development charges in one municipality?
Making it easier if you have deep pockets.
Well, the problem being, though, is now where the housing is starting, it's already a struggle to afford, and now you add another $25,000 onto a townhome.
Right.
Now you're into the $525, $550, $575 for a new townhome in not even in the core. Mm-hmm. So it becomes very, very expensive. And I think that if they're going to eliminate some of these issues and, GST for not just first-time home buyers, that would be amazing. But it's just, I just think but you say they were receptive, but I feel like you're just talking to deaf ears, are you not?
No, because I found like they're receptive and they were actually listening. And I think there's a budget coming out in a week and a half.
Right.
And I think that budget will focus around housing and some of the housing. And then they want some additional stuff moving forward. Like they need some stuff for 2026. They need some wins in 2026. This budget has to pass.
Yeah.
Right.
So this budget has to pass. Like if the opposition, if everybody opposes it, we're going to another election. So I don't think, I'm not sure that anyone wants that. I know one party for sure doesn't want it, but the NDPs probably don't want it, but everybody else would probably entertain an election. So it's going to be interesting to see what comes out, but it should be good for Canadians, and we do need to balance our deficit for sure. But that's an uphill battle, especially with the trade agreements that are still holding us back. I mean, there's so much that's holding us back. We have so many headwinds, yet we're trying to get ahead, but it's difficult.
Well, it's one of the questions we had from the website this week at realestateandmortgageshow.com. From Josh, he asked, do you think the government will eventually pass Bill C-4, that's provincial, to help first-time home buyers buying new homes by providing a rebate on GST? How's that looking?
So it's in their third reading right now, so it will be passed. It's not passed yet, but it will be passed. The problem is they're trying to tackle a few other things as they're doing this at the same time. So that was I did respond, to Josh. I did respond to him. Great question. It's going to happen. We thought it happened earlier this year. We thought, it's already done. And then it's like, no, this is just proposed. So it's in, I think it's called the third reading. Yeah, it's in the third reading right now, which usually means you get to a third reading, usually means we're passing this. And so that should be passed, whether it be by the end of this year or early next year. So, but right now that is for first-time home buyers buying new builds will be GST exempt. Only first-time home buyers and only new builds.
But not quite yet.
Not quite yet. But hang on, it will happen. But like Frank said, when he went to the Hill, like they're trying to say, why is it just first-time home buyers? Why couldn't it just be everybody is GST exempt?
On new
why
builds?
On $1 million when the default insurance is 1.5? Like there's lots of questions where, in smaller cities, maybe the $1 million is a big enough limit. But in other cities like Toronto, it's not. And boy, there's a lot of cranes there that are just sitting idle.
Well, the builders there, they're canceling projects.
Yeah.
Like I read an article last week. I can't remember the exact number, but it's somewhere around 3,000 to 4,000 units have been just shut down because the builders just can't
just canceled.
Just canceled.
Not even put on pause, canceled.
Canceled. Yeah. And that's why a lot of them are now turning into purpose-built rentals now, because they can then get shovels in the ground. So, yeah, there's more cranes in the sky in Toronto per capita than anywhere in the world, and they're actually
most of them are idle.
Most of them are idle right now. So it's a tough sledding in Toronto right now.
Scary market. Folks, if you've got a question, head over to realestateandmortgageshow.com. You can submit it there or give us a call at 521-TALK, 521-8255. We'll be right back. Welcome back to the show. So another question we had this week submitted on the website, Paul, came from Rick. Rick, who's a longtime listener. Thanks for submitting, Rick. He said, is it possible to tell us the number of listings on the market each week? He finds it a very informative and interesting stat. So you put together some numbers for us this week. What do you got?
For sure. I mean, I used to do this, but I kind of tailed off a little bit. But yeah, at the end of September, we had 3,700 homes on the market, which doesn't sound like a lot. But when I look at years past, it's actually quite a bit. Right now, we're currently at 2,543 residential units and 1,154 condos. That number is alarming. 1,154 condos. That's high. Yeah. That's very high. I mean, we need to be at like 650, maybe 700.
Right.
You're at 1,154. That's a lot of condos on the market, and that's a scary number. So that's a total of 3,697. So just shy of 3,700. If we go back at this time last year, we're just over 3,000. Right now we're 3,700. So we have an extra 700 homes on the market. And if you look at 2023, there was 2,328. So we're 3,700 right now. So this is a great market for buyers. It really is. You have tons of inventory. We know rates are coming down. It's just a perfect storm for buyers right now to get out there and purchase something at a good price. And especially as we're tailing into our slower part of the market.
Right.
So, but I still say it's a very healthy market for both, because I'm seeing lots of sellers who have their house ready to go and they price it properly and it shows beautifully, and they're selling in a weekend.
Well, we're in that months of inventory range where it's a balanced market, correct?
Well, we're in a balanced market, but it doesn't matter. That's the macro. But if you want to go micro, there are some areas that are still in a seller's market. There's some areas in a balanced market,
sure.
And there's some areas that are in a really strong buyer's market. So if you break it down micro, macro, yes, our numbers say we're in a balanced market, but there is a lot of variations between areas right now. So. I've said this before, like if you're in an area that has a lot of new home builders in it, so you have lots of competition, there's a lot on the market in those areas. But if you have an older area with no new home builders in it, there's less homes on the market in those areas. And those are the areas that are actually selling quicker and for more money.
They get snapped up quick.
They get snapped up quick. But I will, Rick, I'll let people know what's going on with the listings every week or every couple of weeks. I'll let people know how many listings are on the market. But we're at a point right now where it doesn't sound like a lot. Like 3,700 listings is not a lot. But it is more than we've had over the last 2 years by quite a bit.
Compared year over year.
Compared year over year, it is quite a bit. So it's a good number to know anyways.
So it doesn't feel that long ago that, remember, 7-8 years ago, remember there were 10, 11, 12,000 listings.
Yeah.
What a change. I mean,
yeah.
And our city has grown. So that's why I've always said when we get to those numbers, as the city grows, you would think that there would continually be, if our city's grown by 3%, well, then there should be 3% more listings every year over year kind of thing. But
we're finding right now, and this is especially a time too, where people are making that decision of, do I keep my house on the market? Do I take it off the market and put it back on in spring? And I personally think you need to keep your house on the market right now, because we still have some legs left in this market. I mean, we're not far off November 1st, but by the time you get to November 20th, November 30th, that's when you have that decision of like, do I take it off for Christmas or not? But I've always said there's no bad time to sell your property. Yes, there's less people looking around Christmas, but there's less competition because people are taking their house off the market. When there's less competition, sometimes you get to cheat on your price a little bit. So, I wouldn't be taking my house off the market over the Christmas period. I mean, there's times where you're probably not going to show it. Christmas
December
Day.
25th at 5 p.m.
But listen, there's different cultures that don't celebrate Christmas,
Fair
right?
enough.
So one of my inside sales agents, Jason, he's always like, I got Christmas Day. I'll take Christmas Day. I'm like, who's calling on Christmas Day? He's like, I get 5 or 6 calls every Christmas. Every Christmas, someone calls and says, can I see your listing at such and such? And he's like, yeah, today? How about the 27th? How about we show it on the 27th,
Right.
But there's some cultures that don't celebrate that, right? So they don't care about that. So they want to see a house. It's Christmas Day it is.
So with rates coming down and the bigger inventory, are we starting to see some investors come back into the market?
We are and we aren't. I mean, we need to see the rates come down a little bit because I'm still finding that investors, it's hard to cash flow positive, because the rates are still high. Prices are, stagnant. Prices are pretty good. So we'll start to see a few more first time. Like Benjamin Tall, he's the economist for CIBC, and he's usually gospel. And he said that we should get a rate drop next week, and we should get another one in December.
Or January.
Or January, yeah. January. But if that happens, if we get 2 more rate drops, hopefully before Christmas, we get 2 more rate drops, we are going to start seeing the first-time home buyers come back in droves, and we're going to start seeing the investors come back in droves, because that will start to make things cash flow positive.
Right.
Problem is, we have a lot of people this week who are like, yeah, I'm just going to wait. I'm just going to wait till prices come down. And I'm like, what? You're waiting for prices to come down? What happens when rates drop and people have all this demand on the supply? Prices go up. Always go up. So, I mean, the prices are 100% going to go up. We saw a blip a couple of years ago where our average sale price went down, but that was only 4 times since 1956 that our price went down. So,
and we've talked about many times how stable of a market Ottawa is, and those prices going up over COVID were insane. That's unusual, but our usual is going up. What, 2, 3, 4% a year?
3 to 5% is a kind of like a normal
standard year in Ottawa.
5% is a pretty good year, actually. And right now we're at 3.9. So we'll probably end around 4.5% up, which is a good year.
But up.
Absolutely.
Right.
We're going to be up. Yeah, for sure. Our number of sales will be up, and our average sale price will be up. So,
well, that's good news for you, right, Sean, on the mortgage investment side, that we've got steady real estate prices, because that's one of the biggest fears.
That's always in the private lending and alternative lending. Real estate is first and foremost what you're looking at, right? So the security that you're securing your mortgage against, you want to make sure it's a good property, that the market's stable. Again, too, as the exit plan for most of our borrowers is short term, with ups and downs and fluctuations, which we don't get in Ottawa. Again, it provides stability to our investors that exit strategy is still going to be in place in 6 months or 3 months, whatever it may be, for those people to move forward.
For someone who's just listening to the show for the first time or haven't heard you speak,
I didn't think that was the case. I thought we had regular listeners.
But just tell us what you're doing, what you do.
The crowd goes wild.
No, they do. Well, at Advanced Mix, so we have investors that are purchasing shares in a pool of mortgages that we're lending out. So they're not individually investing in the mortgages themselves; they're purchasing shares of our pool, and then we lend that out to alternative and private lenders or borrowers, that just need a short-term solution for whatever needs they may be, and they come in different varieties. And that is our end goal at the end of the day, is to help those people be in a better spot 3 months, 6 months, a year from now, from a borrower's perspective. And from an investment side of things, again, when you talk about the headwinds that we're seeing in our economy and out there, it provides stability for a lot of folks in their overall investment portfolio. Yes, we've seen obviously a run up in the traditional markets out there right now. But again, I have conversations with a lot of investors that say, you know what, I understand that I've been able to get a good rate of return on my investments, but I also need that stability. So we really provide a stable return. We just finished our fiscal year at the end of August. It looks like as we go through our audit, we're just going to be over 8% on a compounded return to our investors. So every person that I talk to, a lot from this show, they really enjoy that stability in their overall return.
Well, but I would prefer to deal with tenants, though.
Yeah, exactly.
I don't want an easy investment, Sean.
No.
I want challenges and headaches.
An easy 8%.
Well, you haven't had to get rid of the tenants, right?
Yeah.
So until you have that conversation, I know you have, Paul, in your experience, but that is also true, right? And people can see that, and it's a tough go when you have to intervene with a tenant that doesn't pay, and we all know the challenges there. Yeah,
absolutely. And the bulk of your lending, Sean, it stays in the region, correct?
It does. So we're about 85% in Ottawa itself. Maybe a little bit higher if we just take in Eastern Ontario, about 90%. So and then sprinkled around in Ontario.
Okay.
Yeah,
oh no, that's awesome.
That. Yeah.
Common sense, right? Common sense lending more.
Common sense lending, which goes back to, at the end of the day, the security is so important to us when we look at that, because we know that when a borrower is needing a short-term solution, if the broker is working with them to do that, that from an investment side, short-term lending is a benefit for the investors at the end of the day. The longer term that someone is in a private borrower and a private solution paying, higher rate, there is a breaking point. Right. So that's why we really focus as a lender, being a short-term lender, to help people out.
Please tell me you're not investing in downtown Toronto condos now.
No, that's the one. That's the one. Yeah, it's obviously the one market that everyone is sort of, you're scared about. We've already talked about that today for sure. Yeah.
Have a question, head over to realestateandmortgageshow.com or give us a call at 521-TALK, 521-8255. We'll be right back. Welcome back to the show. So, Frank, we had an inflation report come out this week.
We did. I mean, it came out a little bit higher than everybody expected, but still, everybody expected the core to go or the overall to go from 1.9 maybe to 2.2, 2.3. So that was expected. Everyone was hoping that the core would maybe come down slightly. It went up slightly. Nonetheless, I mean, that along with a very, very robust job report, I don't think it's still going to derail Bank of Canada from dropping that quarter point on October 29th. Right now, most economists say it's an 85% chance the Bank of Canada is going to drop. And the real reason behind it is the fact that our economy is sluggish. Our GDP is non-existent. We've got a trade agreement that we're still struggling with to get in place, and it's on, off, and you think we're going somewhere, and then all of a sudden it's canceled. So
call it what it is. It's a recession.
Right. Well, Benjamin Tal made it very clear. I mean, take away government spending, and we are in a recession. Yeah. There is no ands, ifs, or buts about it. So, but government spending needs to be pulled back too. So how do you do that? You lower interest rates, and it's funny to hear some people say, well, the reason they're not going to go aggressive at lowering interest rates is because we're going to have this housing craziness again. And I say, I don't think so, because when COVID started, we were going through COVID, the prices of everyday supplies and groceries weren't as expensive as they are now. Today, people are struggling to make ends meet, and that's the reason that I don't think that the prices are going to go crazy.
Cool. All right, we got a call. We got Mo on the phone from Ottawa. Has a question for you, Frank, on mortgages. Welcome to the show, Mo.
Yes, good morning.
Good morning.
Thanks. Back in January, I called you, and I told you that I have a house I want to sell, and I want to combine two mortgages, my principal and my rental.
Yep.
But you told me good luck, with your tenant if he comes out. It was a nasty fight. I had to pay him $13,000.
Wow.
Typical. You're lucky. That's not even a lot, to be honest with you, Mo. I've heard way worse.
So I was able to sell the house, thank God. There was a closing on the 22nd. I have the new house, which is closing on the November 4th. Okay. I'm taking a mortgage. I combined my principal home. I paid off my principal home because it's maturity. And I'm going to take a mortgage of $500,000.
Yeah.
A bank offered me at 3.89.
For an investment property? That's going to be an investment property or the property you live in?
No. The property I live in is paid off.
Yeah. Okay. So investment property. That's a good rate. I mean, the branches.
My question is,
go ahead.
Should I wait for a variable? Should I take a variable and wait a little bit and then lock?
I would. My personal opinion is yes, but on an investment property, the one thing that's a sure thing is that, as long as you get it, the rent is pretty stable across the board. So, for some people, if the property cash flows, then they'll just say, okay, maybe I wait for rates to come down, or maybe I just say, you know what, I'll just take this rate because I cash flow on my property and I'm happy to move forward. But in many cases, I still think you need to consider what's going to happen with interest rates going forward. And if you believe that interest rates are coming down, and many do, then I would say that a variable is not a bad option, depending on what they offer you. Again, these banks sometimes can play games with the variable versus the fixed. So, I don't know if you've inquired about it, but ask them and see what they're going to offer you. Because right now, prime rate's at 4.7. If Bank of Canada lowers on Tuesday or Wednesday, then it's going to go to 4.45. So if they were to offer you prime minus even a half, you're at 3.95. If you were to get prime minus 0.7, which I've seen at banks, then all of a sudden you've got a better rate on your variable than you do on your fixed, and still, the outcome seems to be that either in December or January we're going to have another 0.5% drop. So is it worth another quarter point? So in total, a 0.5 point. So is it worthwhile? I think so, because you could be in the mid threes come January, the end of January, versus being at 3.89, and then see where the fixed rates are, because a variable or adjustable rate mortgage allows you to convert it to a fixed at any time.
Okay, all right, okay. I think
it's worth asking.
You mentioned earlier that there's 2 rates coming up, before December, before the end of the year.
Yes.
So maybe I should wait, I guess, and take variable now.
Yeah, because you have the option, again, to convert it to a fixed anytime, Mo. So it's not like if you take a variable, you're stuck in the variable forever.
Yeah.
That's one of the benefits of a variable, is that you can try and time the market or time it when, especially if in the short term you think that interest rates are coming down, then not a bad idea to take it and just see what happens with the fixed rates.
And with the variable, would be less than 3.89 or?
Well, I think it's going to be close, right? If Bank of Canada drops their rate on, but even, there's some branches that I've heard that are giving away prime minus 0.7, prime minus 0.75. So if today's 4.7 and you were to get prime minus 0.7, you're at 4%. If prime comes down a quarter point on Wednesday, well, now you're at 3.75, which is better than the 3.89 already.
With the chance it's coming down again in December, so now you're in the mid-threes.
January.
Hey, listen, Frank's the mortgage guy, but I would 100% take a variable if you want my opinion. I would take a variable.
Thanks a lot for the call, Mo. Appreciate it.
Yeah, thank you.
Thanks, Mo.
We actually had a related question come online from Scott, who was asking about what's the actual bank's incentive when you if you decide to lock in your mortgage to give you a decent rate when going from a variable to locking.
That's a good question.
It's a great question. And listen, banks are going to try and take advantage of you at the time that you go to convert, because they know that they've got the upper hand. But you need to fight back. As a consumer, you need to fight back. So banks might be offering, like Mo just said, right, 3.89. But if you called and said, listen, I got a variable with that same bank, and I want to convert it to a fixed, they may offer you 4.19. And you say, wait a second, what just happened? How come one client's getting 3.89, I'm getting 4.19? Because they know they have the upper hand. And the upper hand is that if you decide to break it on a variable or adjustable rate mortgage, you only pay the 3 months interest. So they know that they're going to make that money, and that's they're trying to entice you not to pay that penalty, but they win because now that's 0.2 or 0.25% more, not just now, but for the next 5 years that you're locked in. And if you have to break it, then the penalty is going to be even more profit for them. So if you have a full banking relationship with the bank, you have to use that to your advantage. If you just have a mortgage with them, then that's where they have the advantage, where they can say, fine, pay us the penalty and leave.
Because they make a lot of money off the fees.
Everything else.
The credit
bank
cards,
accounts,
fees,
credit cards. You have all that stuff. You've got the upper hand, and you have to use it to your advantage, and you have to negotiate. And if you're not a good negotiator, then shame on you, because you're giving money to the banks that you shouldn't have to give to the banks. Like, become better and just ask for better, and tell them you're going to shop around and watch the way they perk. Especially if you're going to say you're going to move your whole banking, you watch the way that they're going to come back a little bit better. And if they think that you're bluffing, well, then you got to show them that you're not bluffing and say, that's fine, I'm going somewhere else. Just get ready to get a payout statement ready for me. And you got to hold their feet to the fire, ototherwise they're going to take advantage of you.
You got to negotiate hard.
This week, I won't say which bank I'm with, but I do all my banking with a certain bank. And one of the things is when you open up this account, they give you 2 other accounts. I'm like, well, I don't really need 2 other accounts. Oh, it just comes with a package. And I said, well, is there fees to these accounts? Yeah, it's $4 a month on these accounts. What they didn't tell me is they've increased that now to $30 a month. So I'm like, why is this one account that I never use? I'm like, why is it overdrawn? I'm like, $30 a month for fees on 2 accounts that I don't use? And that's why when you're saying, they're making their money on those things, like the fees and the credit cards and, all those things they're making a ton of money on. So that's your leverage right there, right? I mean, you
probably got charged with being overdrawn too, Paul.
I probably did get overdrawn. I'm like, here we go.
Yeah, overdraft fees. The fee by full thumb fee.
I got feed to death, that's for sure. But
you know what I always say? Banks are there when you need money, that's when they give you a hard time. When you don't need money, they throw it at you.
Yeah.
But I don't need it. But when you need it is when they give you a hard time. And, it's no different on the fees. I mean, it's incredible how they just sneak fees into things. And, and
$4 to $30 is quite a big increase.
That's not a sneak.
That's not a sneak. That's like
But people don't pay attention. There's a lot of people that don't pay attention. Just let it go. It's too much trouble. Who wants to go into a branch today and wait? There's 2 or 3 people that work and there's 20 people in line. Who wants to wait that long? That's the difference.
I've walked in and walked out and turned around and walked out looking at the length of the line up in the bank.
And,
I don't have
and
time.
hardly any staff there. And you say, I'm going to spend the next 45 minutes here.
I literally went to my bank the other day, and rarely do you have to go into the bank nowadays, but I had to go into the bank for something. And I walked in, I was like, are you kidding me? There's one person working, and there's a line of 12. One person working. Yeah. It was just frustrating. But anyways.
All right. So in terms of investors getting into the market, and we're talking about, variable rate mortgages and all that kind of stuff, I guess the biggest thing in looking at a property is, can you make it cash flow?
Yeah. The problem with investors nowadays is they're trying to put their heart into what they're buying. You're like, I don't really love the kitchen, and I don't really. Who cares? It's an investment, right? As long as it's cash flow positive. So you got to take the emotion out of it. We're working with an investor right now that, she's like, well, I just want to make sure it's with one of our new builds with Clement. I just want to make sure that I can pick the kitchen color, and I want to make sure that this is perfect, and I want to upgrade this and upgrade that. I'm like, what you want to do is put least amount into it to make as much profit as possible. That's what's called an investment.
Right.
But nowadays it's hard though. You have to be very, very shrewd to find the right investment that's going to be cash flow positive, because there's a lot of areas that won't be cash flow positive. You need to, find something, and a lot of them are in the outskirts. It's hard to get a cash flow positive in the core right now. Very hard. It's almost impossible right now to get it in a condo, downtown high-rise condominium. It's very, very hard for that. But a lot of properties in the outskirts, you are cash flow positive, because if you go to somewhere like Kijiji and you see how many people are looking to rent compared to how many people are renting, there's more people looking to rent than there are rentals on the market. So,
in the outskirts.
Yeah.
There's a huge shortage of rentals in the smaller outlying towns for sure.
100%, and it's more affordable, right? The rental prices are a little lower, but there's tons of people looking in the outskirts than there are in the core right now. But it's finding that right investment that's cash flow positive. And if it's not cash flow positive, you're going to eat into your pocket every month. You better make sure that is going to increase in value very, very quick. And there are areas, if you look at some of the sought-after areas here in Ottawa, the Glebe or Golden Triangle or some of those type of areas, it's hard to find something that's cash flow positive. But then again, you're going to buy it for $8 million, and it's going to go up to $1 million quicker than any other investment. So you're either buying in an area that's really cash flow positive but won't increase in price very much, or you're buying that's something that is less cash flow positive, but it's going to increase in price very quickly. So
you really got to be working your numbers and know what your outcome is if you're going to get into an investment property.
You have to be working with a shrewd mortgage broker and a shrewd realtor who's going to be able to know how to do those numbers for you, guide you in which areas are the best for cash flow or equity appreciation or one of those, because you have to know what you're doing when it comes to investing in a market like this. I mean, back in the day, it was pretty easy. Almost everything was cash flow positive, right? I mean, a townhouse was going in suburbia for $300,000. You could rent it out for $1,500. You're cash flow positive. Not the same anymore. You have to find the right investment, the right area. You got to be very shrewd to find something as an investor that's cash flow positive nowadays. And a lot of times, it's doors. It's if you can get 2 or 3 doors under one roof, like a duplex, a triplex, a lot of times that's where you're going to be cash flow positive. But if you're buying in a nice area, you better have some deep pockets, because those
your
things
outlay
are expensive.
For that.
Those things are expensive for sure.
Yeah,
your initial outlay is much higher, but your upside is also much higher.
Well, and I've seen a lot of the triplexes and quads, so they're $1 million easily.
Easily. And depending on where you're buying, but somewhere in the core, that it's well over $1 million for sure.
Got a question? Head over to realestateandmortgageshow.com and submit it there, or give us a call, 521-TALK, 521-8255. We will be right back. Welcome back. So, Sean, I got to ask, what's it like sitting in between two Hall of Famers?
It's quite intimidating. It's good, as well as I know both of these gentlemen. It is quite intimidating.
I will tell you, though,
Hall
Frank,
of Famer on my right, and Paul, well, he never stops talking on my left there.
You know what I will say, though, Frank? You were going to throw a jab at me at the Hall of Fame speech, and you let me off the hook.
I let you off the hook, right?
I threw my jabs in, but
I know you did. I'm a nice guy. What can I say?
But I also do have to say, this is quite impressive listening to you, steer the ship here and keep everything in line.
But what the listeners don't realize is Greg also manages 3 cameras on us right now.
He
too.
does, and that is hard,
Yeah.
especially with these two. The camovers that you have to filter afterwards. I'm sure there's a lot of work.
The filter.
Hands are moving because Paul's starting to talk like an Italian too. His hands are when he talks.
Yeah.
All right, so Sean, your financials are done you're being audited.
Well, they're being
right
audited,
now.
which is a yearly process. So that's part of our process at the end of the year. We determine internally, obviously, what our profits are and our rate of return to our investors, and then our auditors double check that, make sure everything is sound, and to our processes that in the marketplace from a private mortgage lender, one of the things we really focused on, not to alarm people by any means, is really our loan loss provision. And when you talk about as a lender, one of the things you're certainly doing is always trying to protect your investors. And we focused heavily in the last year, just knowing other private lenders out there, maybe don't focus so much on a loan loss provision. And really what that is, to just give people an idea, is if a fund at the end of the day did suffer a loss, you've already built that into your books and to your balance sheet. And you're projecting that. Not that we have to be alarmed from our powers of sales. We have very, very few. We just manage through that process, and quite frankly, it's next to minimal, because our auditors even questioned us. They said, how do you have so little losses, or we have no losses, sorry, but how do we have a few powers of sales that we work through, and we have never suffered a loss at all.
But your loan to value is so good that if you actually had to sell that property, it's not going to kill your investors.
That's part
because,
of it. Yeah. So where I was going with this is we really have a focus on being a leader as a private lender out there in sort of tailoring the loan loss provision, and we focus greatly on that. And our investors enjoy that because they know that there wouldn't be a loss in our portfolio based on our underwriting and that, but we've protected our investors with that process.
Well, I know we've talked in the past with you that you can get a higher rate of return at other
certainly,
other places, but not as consistently stable year over year as what you guys are offering.
100%. And I always have that conversation. I know Mike, our CEO, does as well. And I tell people, because I had a call this week with a gentleman, and he just said, 8%, I need more. And I said, well, quite frankly, if you need more, then we're not the investment for you.
Right.
Because for us, consistency, just providing that stable return to our investors is what we focus on. There are investment opportunities that you could get more, but as the old saying is, higher risk, higher reward. So you are going to assume a greater deal of risk that we're just not willing to do for our current investors.
And listen, everybody's looking for a safe investment, right?
Yeah.
Okay, sure, you can go get a couple points somewhere else, but you also could lose a couple points somewhere else too, whereas you guys are just a safe investment, which is what people want.
It is. And so then going back, I have more conversations just with that, with people that 8%, that's a conservative return, if you will, in our type of, investment vehicle. And people are very happy with that. And then they look at our overall fact sheet, if you will, that we provide the stability of our credit scores, which is still, always around that 720, 725 mark, just fluctuates.
Which is a great score.
That's a great score, yeah. And that's your average.
That's our average on our portfolio. Our loan to values on our average is always around 70 to 68%, somewhere in there. Again, so going back to if there ever was, an impact where someone wasn't able to pay, our capital is protected by just the loan to value. Right?
So that 8%, is that after your $2 million salary, or is that?
I wish, right?
Yeah. But, so we're coming near the end of the show, and everyone knows my number and Frank's number, but do you want to get your number out there right now?
How do we get a hold of you?
So it's 613-656-0017. We can always be reached at, or advancedmic.com is our website. We've also updated our website. Rowan, our new marketing manager, hopefully he's listening. He's a young guy, so he might not be, but he has done an amazing job of marketing our business. So I just wanted to give him a little shout out.
Awesome. And that's advancedmic.com, right?
Exactly.
Or Sean's address, you can stop by anytime at his house, is 1-2.
I am never there. You probably have a better chance of finding me in an arena. But
yeah, just go to your local arena if you want to see Sean.
All right, Frank, birthdays this week.
I got a couple of birthdays. My brother-in-law, Tony
celebrating
his birthday on Monday, and he coaches the Bel Air Norsemen, and they won their semifinals, so then the championship next weekend. Congratulations, Tony. A good friend of mine that traveled with me in Europe this past summer, Phil Wallet, celebrating his birthday this week, and one of my very, very good friends, I like to call him, and one of our top mortgage agents in our company, and expecting his second son. So Stefano Provenzano celebrated his birthday this week as well. So happy birthday to Stefano.
That's a good German name, isn't it?
Yeah. I had lunch with Stefano yesterday.
I
did.
Yeah.
I do have a couple. I have my contractor, who I use religiously, has pretty much built houses for me in my office and everything. Vic Murphy, his birthday was this week, so happy birthday. Also, Ashley from my team celebrated a birthday yesterday. Ashley celebrated 3 years with the company yesterday, and Glenn was the day before. Glenn Tomlinson, one of my agents, the day before his birthday. So happy birthday and happy anniversary.
Amazing. And Sean, how do we get a hold of you again?
613-656-0017 or advancedmic.com.
All right. Have a great week, everybody.
Have a great week. And please continue to support local business and charities, everyone.